All right, so today we're going to actually talk about the 5 costly mortgage mistakes and actually how to avoid them. So in 2025, heading into 2026, buying a home can feel like navigating a minefield of high interest rates, fierce competition, mistakes that actually can cost you thousands or even the home of your dreams. So today we're going to cover the top 5 costly mortgage mistakes people are making in 2025 and also how you can avoid them. So whether you're a first-time home buyer or a seasoned homeowner, steering clear of these pitfalls will save you money and stress. All right, so number 1 for sure is waiting too long for a better rate. Okay, it's tempting to sit on the sidelines and wait for mortgage rates to drop dramatically, but they will never go back to those levels that they were back in 2021. Now, if rates do fall, you won't be the only one jumping in. So there's going to be a rush of other buyers, and that could actually cause home prices to start driving up those home prices. And that would wipe out any savings from the lower rate that you would potentially get. Plus, the home that you love today might be gone in a few months. So inventory is relatively tight, and especially in hot markets like the GTA, for example, the truth is predicting interest rate movements is nearly impossible. Even the central bank rate cuts, like they didn't necessarily guarantee cheaper mortgages. Some rates actually went up. Meanwhile, home prices, especially in Ontario, do tend to rise over the long term. So waiting often means paying more later. So how to avoid it? So if you find a home that you can afford now, consider moving forward. You can always refinance later if rates improve, but you can't go back in time to buy a home that was already sold. Number 2, this is a big one, skipping the mortgage pre-approval. So house hunting without that mortgage pre-approval is like, I would say, shopping without knowing what your credit card limit is. Many buyers make this mistake and end up falling in love with homes they can't afford. Skipping the pre-approval means you don't have a real budget, okay? And your offers will look weaker in the seller's eyes as well. In competitive markets like the GTA, sellers often expect to see a pre-approval letter with your offer. They want to know that you've actually done your due diligence to make sure that you can afford this home that you're making an offer on. And without it, your bid might not even be considered. So how to avoid it? Talk to a lender or your mortgage broker before you start shopping and get pre-approved. This will clarify your price range and prove to sellers that you're seriously qualified for this particular purchase. With the pre-approval in hand, you can house hunt with confidence, act quickly, and when you find the one, you'll be able to act on it. And there's something different when you know you can afford something you're walking into. You're going to feel different when you walk into that house. Number 3, not shopping around for the best rate. Okay, so choosing the first mortgage offer that you get, for example, going to your regular bank, can be a costly mistake. In fact, more than half the home buyers only get one quote, okay? And that's a problem because interest rates and fees they vary widely between lenders. And even the small difference in rate of 0.5% can save you thousands. But it's not always just about the rate, it's also about the strategy. When you actually go to a mortgage broker, they're not working for one particular lender. They have access to multiple lenders. And having the right strategy, okay, as you go into purchasing your home is critical, okay, for you to save thousands in the long run. Just keep in mind, when you go to a mortgage broker, they're getting paid by the lender and they're not getting paid by what the rate is, okay? So their best interest should be your best interest, and keep that in mind. Number 4, focusing only on the interest rate. So don't get tunnel vision on the interest rates alone, okay? Yes, a low rate is great, but if you ignore the other costs of the loan, you could end up paying more in the long run for sure. Lenders sometimes advertise ultra low rates that come with like hefty upfront fees or restrictions or much higher penalties if you break it down the road. And these sort of things, could actually end up costing you thousands of dollars. And it comes down to having the right strategy. Now, remember, you don't live in the rate, you live in the payment. So having the right payment amounts that fit your budget along with the right strategy is the most important thing that you can have. So consider your timeline and your financial goals as well. Sometimes it's smarter to accept a slightly higher higher rate with lower fees that are connected to it, including penalties, okay, if you have to get out of that mortgage. And especially if you need to keep cash for renovations, emergency, other investments, things like that. The key is to evaluate the whole package, rate and fees, not just the headline interest rate number. And number 5, overextending your budget and ignoring extra costs. So buying at the very top of your budget and sometimes forgetting about all the extra costs can come back to bite you. Many buyers focus only on the down payment and the monthly mortgage, overlooking things like closing costs, land transfer taxes, legal fees, home insurance, moving costs. Those costs can quickly add up. In Ontario, closing fees typically run from about 3 to 5% of the purchase price. And if you're buying in Toronto, you actually pay double land transfer taxes. So both provincial and municipal. And that's a surprise that can total actually thousands of dollars if you didn't plan for it originally. So pushing your budget to the max also risks your mortgage approval. Okay, so lenders have a strict limits on debt ratios, so income to debt. Okay, if you overborrow, you could fail to qualify for that particular loan, or you end up house poor and under serious financial stress. So how to avoid it? Budget for every expense in the household, in the house buying process, not just the purchase price. Get an estimate of your closing costs, your carrying costs, maintenance fees, property taxes, and regular maintenance of that particular home along the way. Just be realistic about what you can afford and use affordability calculators and stick within the recommended debt limits so you aren't stretched too thin. Leaving a financial buffer will ensure you can truly enjoy the home instead of stressing over every dollar. So in conclusion, sidestepping these 5 mistakes, you'll set yourself up for home ownership. The mortgage landscape may be tricky with higher rates, tighter housing supply, but a proactive, informed approach goes a long way. Don't wait forever for that perfect rate or deal, and don't rush in unprepared. Instead, be prepared, flexible, lock in a good rate, and when you can, get your financing lined up early. Compare your options and understand all the costs before you leap. In this market, being proactive rather than reactive is the surest way to save money and secure the home. So that said, happy house hunting and good luck avoiding these costly mortgage mistakes. For any information that you need, just don't hesitate to reach out, and please download the free mortgage toolkit for your own resource. And don't forget to like this video. Looking forward to seeing you on our next one.